Hello everyone, welcome to the IchimokuCharts.com daily analysis for the SP 500 for Thursday, February the 4th, 2010. Well, an extreme day today. Total control from the bears, total commitment here. The bears are extremely keen as well. Closed the market in control with a very large red-bodied candle where the sellers have made net bearish progress for the entire day between the open and the close. The market has opened at the high and closed at the low, and this is the most bearish type of candle that we have. Also, the fact that the candle is so large compared to those around it is probably quite important, showing that the market is quite volatile at the moment. Quite often, though, when we have days like this, sometimes the market does tend to relax a bit. The market may not necessarily retrace substantially this large sell-off, but the market tends to exhaust itself temporarily, so there is a chance that the market may rally to a small degree from here. We might come back to that a little later. But the market has also taken out this important swing low at around the 1070 level and set the market up for a new second time frame downtrend, which is fairly important. The market hasn't been in a second time frame downtrend for quite some time. So we have a series of lower peaks and lower troughs where we have a peak, a trough, a lower peak, and now when we took out that trough we have a lower trough in place. So we have a second time frame downtrend as well as the new first time frame downtrend that the market established today. So quite substantial reasons for concern with this market. Now we've also had a substantially bearish close outside of the cloud and to the downside, and that means that the market has actually turned bearish and has a negative bias in the longer time frame. This market is also trading down below the Tenkan-sen and the Kijun-sen, which means in the medium to short-term time frames the market is also bearish. And both of those indicators are pointing down very sharply, especially the Tenkan-sen, which reflects the short-term trend. It is pointing down very sharply, reflecting very strong downside momentum in this market, and that's reflecting this very large sell-off today. Quite often when markets have such large momentum, then they tend to want to relax, and there is potential for this market to retrace back up towards the Tenkan-sen. And we have a lot of confluence of potential resistance within this area here around this 1080 level. It was a previous area of support and resistance, and potentially if the market does trade up, then it will act as an area of resistance to this market. We also have at 1083 the Tenkan-sen, and that's a potentially strong area of resistance, and also the bottom of the cloud here can potentially act as resistance. So there is a decent barrier to the upside to this market if it does appreciate. To the downside, there isn't really any support until we trade down to 1041. There is a minor level around the 1060 area, just below it, and that's only a fairly minor level, but I'm not too sure if the market will hold up there. So for this market, the low of the current candle becomes very important. If it's taken out, then we should see the market trade down to this 1041 and potentially find support down there. And if the market does attempt to retrace part of this day's sell-off, then potentially there's very strong resistance around the 1080 level.